In this video, we're going to look at some of the basics of stock trading as part of our Trading Terms series. Hello, I'm David Jones. In recent weeks, as part of the Trading Terms series with Trading 212, we looked at what is a share. Now, although clearly we've seen a growth in popularity in trading things like FX over the years, there are still plenty of people out there who trade individual shares, whether it's short and medium term as traders or longer term as investors. So I thought this time around, let's take a look at some of the things that drive share prices, some of the things that traders and investors will be looking for, and a few real examples from the real world of trading and investing in individual equities. So let's go through some of the basics. What are people trying to achieve? The traditional and of course I think widely used approach is to look to buy low and sell high. So people will be looking for shares that they think are cheap compared to where they should be trading, buying in and then hoping at some point in the future, whether that future is 10 minutes time, 10 weeks time, 10 years time, they're going to be able to sell it higher. But also thanks to products such as contracts for difference, which we explain in a different video, you can also profit from share prices falling. So if you thought, for example, Facebook was massively overvalued, you can sell high, you can sell shares you don't own with a view to buying them back lower at some point in the future. Again, whether that's short, medium or long term. Plus, of course, some shares will pay out dividends. So they'll pay out a portion of their profits to shareholders. This is probably of lower concern to traders. It tends to be more for longer term investors, but where they'll get some income against their shares for holding them, assuming the company does pay out a dividend. So what drives the share price? There's lots of things. Results, financial results, and how profitable they are is an obvious one. A company that's increasing its profitability, you would expect the share price to continue to move higher. So that's something that longer term investors and maybe short term traders will be looking at when it comes to make their buying or selling decisions. Earnings updates are a big focus for share traders, particularly when it comes to US shares where they're reporting quarterly. If we see a surprise, either good or bad, for a company's earnings, we can often see quite a big move when those earnings are announced. Then of course there's market expectations. A brand new technology, let's say something like Twitter, may not be making any money, but at some point people may think, well actually this is going to change the world. Twitter hasn't done that yet from a profitability point of view. But again, how we expect it or how the market expects a company to do in the future can have a massive influence on what the share price is doing. Then of course there's market trends. For example, in the stock market, let's look at US stock market, seeing a fantastic trend since the lows from the financial crisis in 2009, where markets just go up. So plenty of people who are looking at charts, whether they're short, medium or long term, will be looking at what is the trend for this share. Is it going to continue? So let's take a look at Facebook first of all. I think this is a good one to start off with, where when it first came to the market, there's a lot of hype, but then struggled in the early days about how to turn a profit, how to actually make money off its users. That clearly hasn't been a problem recently. And as profits have increased and expectations have increased, we've seen a good rise. So this is where the company's growing profitability, we've seen the share price go up. For a more short-term example, let's take a look at Netflix. So Netflix, clearly the online video streaming company. They came out with earnings. So their latest quarterly results came out towards the end of January 2018. It closed around about $227 a share. Those earnings, when they came out, it turned out that Netflix had added more subscribers than anyone was expecting. So what does that mean? Well, the next day, the share price opened up at $254 a share. So we saw a 10% jump overnight just based off those earnings numbers. So this again is another example of how maybe short-term traders will look at major announcements such as earnings and results and try and figure out what the share price is going to do and try to profit from it. And sticking with the theme of US tech stocks, let's have a look at Twitter. So this is, when was this? This was going back 2016. So Twitter, since it came to the market, has struggled to turn a profit, or just hasn't over quarters. It's something that plenty of us use, but they were still trying to figure out how to monetize it. So here's an example where Twitter, maybe after some earnings back in 2016, traded as high as $25. Short-term traders may think, well, actually, it's a bit overvalued up here, it's still not delivering a profit. So a short-term trader may be thinking about trading it short selling, using a product such as contracts for difference. There we go, the price came crashing back down to earth again from that $25 level, falling back towards $16. So stock traders, if they're active, will often be looking to trade stocks in both directions. So you can see there are a few different approaches that would have worked. It's not about just using one approach, whether you're a trader or investor. So 3 real-time examples there. We'll start wrapping things up, but don't forget, with Trading 212, you can trade commission-free on individual stocks up to a certain number of trades per month. Go to the website to find out a bit more detail about that. And of course, if you want to trade leveraged, trade short selling, all that sort of stuff, you can trade using contracts for difference. But we'll start wrapping things up there. As usual, any questions or comments, or you're not sure of anything, leave us a message down below. If you like the video, click on the thumbs up, and to never miss out on any of the stuff we do during the week, we push up a whole load of videos on different market topics. Make sure you're subscribed by clicking the subscribe button there and then clicking the alarm bell notification down there. But for this week, from me, David Jones and Trading 212, we'll leave it there, and I hope you have a good trading week.